Just 1 minute.
Yes, we are now live. Namaskaram. Thank you again for the second day sessions in Aramurthanayagi Sevai Mayam on COVID-19 seminar. Our guest speaker today is Mr. Harsh Madhusudan. Mr. Harsh Madhusudan has probably one of the most distinguished resumes that one could hope for. He has studied at Dartmouth College and is an MBA and is the Chief Investment Officer at investment advisory and investment banking organization. And he writes extensively on economic, social, and political issues. And I have noticed that throughout these last few years, during the downturn as well as the COVID-19, current COVID-19 situation, he's been one of the most persistently optimistic and upbeat people on the Indian economy. So that is one of the reasons why we have invited Mr. Harsh Madhusudan to tell us how this is actually not as bad economically as we think it is, and how India is particularly poised to gain advantage from this situation with respect to relative to other countries. Harshji, the floor is yours.
Thank you so much, Suren. Is my voice clear?
Yeah, yes, it's not great.
Perfect. So thank you so much, and thank you to your entire team. I am absolutely honored to be able to address an august gathering to discuss my views about the Indian economy going forward. I'll just add quickly to my background so that viewers can make a sense of whether they should listen to me or not. So besides, as you mentioned, I have studied economics in my undergraduate. I have done my MBA. I also briefly attended IIT Delhi. I'm not a PhD in economics. I'm not an economist in an academic sense, but I am an economist in the sense that if my ideas of the economy don't work out, then I lose money because I'm an investor. I've approached economics less through academia and more through finance on one hand side and on the public policy on the other hand side. So along with writing for Mint and for many other publications, I have also worked as a development economist in the villages of Rajasthan and slums of Delhi for MIT Poverty Action Lab. Irrespective, it goes without saying that all my views are my own and not with any institutions that I've been connected to in the past or right now. Okay, so I think there was an excellent introduction by Suren about the economy. I think the default assumption, which has been exacerbated during the COVID crisis and has been there for the last few years, has been bearish on the economy. And as he's rightly said, I'm bullish, I'm optimistic. Obviously, I would like to think of it as being realistic and empirical. But yes, being optimistic is the right characterization. So how do we think about the Indian economy? It depends on the time frame, it depends on the inputs. So you can have a 15 to 20 year kind of time frame, both in the past and the future, that's long term. You can have a 5 to 10 year kind of view that's both in the past and the future, that's midterm. And you can have a 1 or 2 year kind of take, which is short term. So on a 15, 20 year basis, if you look at the rolling averages of Indian growth per capita, they've been constantly increasing. Over a 15-year basis, that's probably around 5.5% per capita. So you'll have to add population growth on top of that to see how much the Indian economy grew. And that's been constantly increasing. So just, obviously this talk is much more than linear extrapolation, but if you do extrapolate, the Indian growth has been increasing over the long term, since about the end of the 1970s. Over the medium term, I would say since around 2013, especially 2012-13, we have been in a downturn. So how much of that is a secular downturn, so to speak, and how much of that is a cyclical, we need to understand. And finally, in the short term, there has been the COVID problem, right? And what this kind of dislocation, which is a global dislocation, is that only a short-term problem for India, or does that mean that some long-term positives have opened up for India? So I'll talk about all these three issues, but focus primarily on the COVID part and what that means. So over the long term, you see, the demographics and long-term technology trends mean that India anyways is a very positive case going forward. What I mean by demographics, just to give a very brief number, the population between the age of 25 and 64 compared to the entire population for India bottomed out at about 37%. So that means 63% people were either young or old and mostly non-earning. compared of the whole population, and most of them are actually younger than 25 in the mid 1970s. Right now, that number is around half of India, and the number is likely to keep on growing for the next 20-30 years. China, incidentally, also bottomed out its share of 25 to 64 population at 37%. Most of the Chinese then were also younger than 25 and not older than 64. But that number peaked at 60%, so much higher than India's already today in 2015, and it has begun a rapid fall. So what I mean by that is, say by 2040 or in the 2040s, there'll be 200 million more working age Indians, peak working age Indians, 25 to 64, compared to the Chinese. And often what happens is a lot of our economic discussions about growth tend to basically be derivative of demographics, whether it be a savings rate, investment rates, growth rates, although all of them also follow business cycles. So sometimes because we like to feel important about ourselves and say, okay, this government has done this, that government has done that, therefore this growth has happened. A lot of it is much more baked into the cake. Okay, so having said that, let's go to the midterm now. So I'm quickly going through the long term and midterm so that I can come to COVID, which I think is the title of the talk, Indian economy going forward post-COVID. Midterm, there is something called a dollar cycle. A dollar cycle is like a 15, 20-year cycle up and down. And when the US dollar kind of strengthens, emerging markets tend to weaken. When the US market tends to weaken, US dollar tends to weaken, emerging markets, including India, tend to strengthen. So 2002 to 2012 was roughly that decade was the dollar weakening, and we saw rapid growth across emerging markets, India, China, and because of China, in commodity exporting countries as well. India obviously is a commodity importing country. And in the last 7-8 years, we are seeing a dollar strengthening and the Indian real estate cycle going down. Indian savings rates are coming down because on a cyclical basis, not on a structural secular basis. So whenever the economy slows down, savings rate fall down, investment rates fall down. A large part of that is actually just private residential real estate. If you go to RBI's website and break down the numbers, and that a lot of economists would agree, whether 2020 or 2021, the dollar is close to a cyclical peak. So anyways, there is reason to be bullish going forward. So that one is demographics, technology, I'll come to it. The third part is policy. Policy, to go very quickly, the Modi government has focused on infrastructure more than the previous government. They have focused on trade policy. After cutting down tariffs for a long time, we're finally raising them a bit. Not too high, but bit, just to incentivize domestic industry, industrial policy, internet policy, and they've all been, and basics of sanitation, water, electricity, access to the poor, along with roads, so that they can come as part of the Indian and global economy. Okay, I think that sets a broad context about structural drivers of the Indian economy and the midterm cycle. Now, specifically COVID and tech. COVID, obviously in the short term, we've had a massive economic problem. Maybe this quarter, April to June, some people are saying will be minus 25% GDP growth compared to the same quarter last year. But I want to see more slightly longer term impact of the COVID crisis, longer term, longer than this, than just this quarter. So, what is India's per capita GDP? India's per capita GDP is slightly more than $2,000. And the US per capita income was around $65,000 per person before the COVID crisis. So it's about 30 times or maybe even slightly more per person. The average American, if not the median American, the mean American income is 30 times or more compared to the average Indian. And even if you adjust that for a cost of living by a factor of 3 or 4, that is still a very large difference of, give or take in the realm of 10x. Historically, that was the problem because, poorer countries have used that to do manufacturing of goods and slowly rise up the economy. So we are also trying that now with Make in India and Atmanirbhar. The Indian middle class, though, in the last 30 years, and is especially true in South India, has been made on the back of services export. While obviously our manufacturing has increased in absolute terms, in terms of percentage of the GDP, manufacturing has either remained the same or has actually fallen a bit. So the services started very simply, like basic BPO stuff. Then was slightly more value add stuff, or concurrently like Infosys, TCS, Wipro, where we had IT graduates going in large numbers to offsite and occasionally on-site to solve problems. Then we had the third phase of GCCs, Global Capability Centers, or in-house R&D or in-house back office where you don't outsource to another company, but a multinational, for example, an American or British multinational opens an office in Bangalore, Chennai, Pune, Hyderabad, Gurugram, Noida, and the cost difference is massive. And obviously, all that has been made possible because of the internet. Now, what has happened with COVID is those trends have suddenly gotten massively accelerated, and I'm sure a lot of you understand that, but I just want to recap this to emphasize the strength and depth of this trend. So, everybody knows WFH now, right? WFH, work from home. TCS has mentioned that by a large fraction of its workforce will be working from home on a permanent basis by around 2025. I think Facebook and Twitter have allowed all their employees who want to work from home to work on home almost on a permanent basis. Now, I mean, that does not necessarily mean they'll never come to office. It will mean that they'll probably come to office, once a week or once a month. So whatever the project team requires. Basically, what a lot of people used to think was if somebody works from home, he or she will be distracted, with the family, with the kids, and so on and so forth. That is obviously partially true, but a lot of people were surprised by the productivity of people by working from home. Now, if you're thinking that the future is human capital, the future is knowledge economy, while obviously we still obviously have to do something about manufacturing and agriculture as well, that goes without saying. But if a large part of the value add in the future is from the knowledge economy, and if somebody can sit in their San Francisco home and work for a San Francisco company, then they can also sit in Bangalore and work for the San Francisco company. And they can also sit in a Lucknow or Patna and work for a San Francisco company. And the cost of living differentials are so huge. I'll give you an example. You can do your own research. Numbeo, NUMBO is a famous website to compare city costs. And they have their own problems in how much you believe that. But according to Numbeo, the cost of living, including rent, is 6.3 times in Hyderabad compared to San Francisco. Now you can adjust for quality of living, for taxes, for healthcare, for absolute amount of savings, but the rough number is ballpark correct. You can, if you hire somebody who's 6-7 times cheaper, like $200,000 there and maybe $30,000 here per income, even if that person, including the rent and perks and the office rent and everything, even if that person is allowed to go to the corporate headquarters in the US 2 times a year and be with the main team or the senior bosses for 1 week twice in a year, so 2 weeks in a year, the cost still is massive differential. And I think that is something we need to look at going forward, because the sheer it is so compelling, the differential in cost, that I don't think outsourcing, whether you want to call it, or globalization, whether you want to call it, is over. When a lot of people say globalization is going to slow or reverse, they generally mean globalization in goods. They mean globalization in manufactured goods. They mean globalization in the sense of immigration or H-1B visas, working there part-time, but for that part-time, you're still living there and working in the US, for example. So when we think of globalization, we think of what Trump is doing, the trade war with China, what we are doing with China because of the geopolitical tensions. But that is only one aspect, along with immigration, goods, and pandemics is a great example of negative globalization right now. But on capital, so India is a capital-starved country with excellent demographics, and we have very new structures like REITs and InvITs. The second real estate investment trust is about to be listed in India in this month. After Embassy, Blackstone, REIT, we are getting Embassy, we're getting Blackstone and Raheja. The Mindspace Park IT is going to be listed. Excellent way of improving the financial system and bypassing the banks. So there are a lot of trends that are happening which will make this work from home become outsourcing 4.0 for India. Now, what are the technologies that further add fuel to the fire? If it's only coronavirus, then it can go away with due course of time. So we just saw Reliance launch GeoGlass. Now, GeoGlass might be launched next year or a couple of years from now. It is perhaps a cheaper and not as good version of Microsoft HoloLens 2, like augmented reality, virtual reality, mixed reality. The idea is it is something better than what we are doing right now in a video-based webinar. It is more three-dimensional often, and it's almost like a hologram, which is hence the name Microsoft HoloLens. It has massive implications for education, Healthcare is a big problem right now. Education is a perennial problem. We are having problems with teacher unions. The poor want to send their kids to private schools, but government cannot let go of teacher unions right now. All that can be disrupted with better technology to some extent. So what will happen is with these technologies, along with 5G, along with artificial intelligence in translations for non-English languages, and all these sound like buzzwords, I understand, but the technology is consistently getting better year and after year, and there'll be a tipping point very soon whereby it will be less, it might never be fully as natural as being in person. So for example, we are having this webinar, it would have been something else if I was speaking in front of you physically, but this gets around 80% of the work done. With those technologies, we'll get to 90 or 95%. So I'm not saying that cities and central business districts and offline touch and shaking hands once the pandemic is over will ever fully go away. But if you are a $150,000 professor teaching computer science in New York, you can do that for 1/3, 1/4, 1/5 the cost from Chennai. You can live close to your loved ones. The university saves money, and everybody is better off. Now, will that mean that there will be a backlash against this kind of outsourcing and services from the US? It's possible, but that's where the geopolitical context comes in. The US and India are coming closer because of China. Therefore, the US is more likely to tolerate surpluses, especially services surpluses from the India going forward, even though this threatens their middle class more than the blue collar working class, which was on the manufacturing side. Even more than that, unlike the Chinese apps which we have banned, and we might ban or unban them depending on how it goes on the LSE, we've allowed Facebook, Google, and all of them to be prominent in India. So we have a lot of cards to play. If the US ever starts banning or controlling our services exports to them, the kind I'm talking about, through AR, VR, MR, and 5G, then we can completely start our own digital ecosystem behind a great Chinese wall, digital Chinese wall, so to speak. So I don't think it will reach there. My point is, we are not beggars with our hands open. We have a lot of cards to play. So this coronavirus induced digitalization acceleration, work from home, virtualization. I think this is very, very underestimated right now. And why this across country, even within India? People can now work from villages so long as they have good broadband, and they don't have to pay very high rents for living in the middle of the city. Sridhar Vembu, some of you might know him. He is the founder and owner of Zoho Corporation. He lives in a village in Tamil Nadu. I mean, he's a fascinating, very interesting guy, and he's running one of the few successful digital product companies, and not services companies, product companies. The entire suite of sales software, something equivalent to office software. He also has something for video conferencing and chat, and he's running that from a village. I think that does not mean again that all of us will go and start living in villages, but there'll be a massive way where our city kind of living will be available in villages that will reduce the lower cost of living. And eventually that means a real appreciation of the rupee. I don't want to go into macroeconomics of that, but real means inflation adjusted appreciation of the rupee in the coming 10 years. It's been already happening. You can't see it on the nominal side, but it's already been happening. It will further accelerate. So which is why I have said that $5 trillion by 2025 and $12 trillion by 2030-31 are my personal goals. I've written about them. I've spoken about them extensively. So I'm very, very bullish because a lot of trends were in place, but all these trends have gotten further accelerated in India's favor in terms of the China disruption on trade and digitalization, on virtualization with services, working from home. There are many other aspects I can go to about financialization. India had the only reason you can ask, if all this is so good, why was India so slow in the last 3-4 years? One reason, as I was mentioning, we were in the dollar strengthening cycle the last 7-8 years. And on top of that, Narendra Modi government did a lot of fiscal conservatism. We were reducing the deficit faster than perhaps we should have. We had inflation targeting, and whenever inflation targeting comes, for the first 3-4 years, there is a slowdown, as it happened 2-3 years at least, as it happened with Paul Volcker and the Federal Reserve in the US in the early 1980s. And also there were a lot of short-term pain, long-term reforms like GST, controversially, but I would say even demonetization. And these reforms are not perfect, but they all had long-term benefits of formalization and financialization. So I think in the second term, we will have less painful reforms, and we'll have more carrots and less sticks, if I could put it that way. And now is the time to kind of reap the harvest of the hard work and the tightening of the belts that we've done in the first Modi term from a political economy point of view. So I would not linearly extrapolate too much the slowdown of the last 2-3 years and say therefore you're not going. We still need to fix our financial system and the real estate system from a very short term point of view. And I think we are going towards that. We can have more specific tax incentives, but I think there is a lot of liquidity being pumped in. We are buying a lot of dollars. We have $516 billion of foreign reserves as of 10th of July. So I think all the parts are coming together. The rupee is not too overvalued to allow another kickstart for manufacturing exports. We have an integrated internal market in terms of the GST. Again, things can be improved there. So I would perhaps leave it there if you have any questions. Otherwise, if there is any particular point you want me to focus on, I can double down on that and maybe explain that and discuss that better.
Thank you, Harsh. That was a very quick and very whirlwind tour of all our comparative benefits and advantages. You mentioned about the. I myself have a couple of questions, but in the meantime, we will be taking questions which you can put on the you can put it in the questions list inside the application itself. So while we're waiting for the questions from people, there are two, doubts that we had. So first of all, if I'm taking as a takeaway, you're saying that between our services, workforce services, there are services first mover advantage, and the second advantage of having positive, favorable demographics. You're saying that long term we are having certain benefits. Plus, we have heard these impacts, these interventions in the last term, in the last administration, Modi administration, which will give many long-term benefits, such as the GST, etc. My questions, there are two questions that I have. First of all, given the state of our educational system, how much juice does our demographic advantage have? And the second question, given the state of our legal system and our judicial issues and the ad hoc nature of policy making in our country, how much of an impact on economic growth do you think that will have? It would be interesting if you could shed some light.
Suren, I think both are absolutely excellent questions and on the point, and perhaps the two most relevant factors to think about going forward. So I'll start with the education sector first. I'll first start with higher education, then I'll go to lower primary, secondary education. So see, one way to understand whether higher education right now is a stumbling block or something that is clogging the pipeline is to first look at entry-level white-collar service jobs, the salaries thereof. So if I'm not wrong, and you might probably remember this better, around 2000, the entry level of an average Infosys, TCS, Wipro guy salary was around 2 lakhs. And around 2020, it's around 4 lakhs. So it's actually maybe even slightly less actually. So it's actually gone up by 2 times in 20 years. So that's around 3.5% CAGR, which is much less than the inflation. So what I mean to say is that in real terms, your entry level white collar service job salaries have actually fallen in the last 20 years. What that means is that the supply of entry level white collar service talent has been more than the demand thereof. So what in a certain way, all the mushrooming of the private colleges, especially once again in South India and around the NCR region in Delhi, all those people are saying, oh, politicians are opening it, they're shady. Yes, there are many problems with all of them. But that entire boom has served an important point of providing entry-level white-collar service talent, which is why the salaries have not gone up. But it's just simply a market supply-demand implication that we can extract by looking at the numbers. Now, does that mean there are not problems above and below that? No, there are problems. For example, if you look at very good mid-level management kind of positions, slightly older, slightly more senior. If you look at product development software positions, and not just IT services entry-level position, which are also, by the way, trained by these companies more and more. There are problems at higher levels of Indian talent pool. There are clear discrepancies and clear gaps, and a lot of startups and high-end large companies will say they're having problem getting the right talent. Part of that is the Indian pay needs to rise faster, I think, at the top level. It is, and actually that demographic has received a faster inflation-adjusted wage rises compared to the entry-level white collar. So I would say right now, education is not a barrier. In fact, despite exporting so much talent outside, our entry-level white collar is still there. But what about the primary and secondary one? Are we repeating the mistake that Nehru made, where he focused on higher education and did not broaden the pyramid, so to speak? Now, if you look at that too, there are mixed signals. If you look at Pratham survey report, the ASER survey reports that come every year, then till a couple of years ago, they were falling for the last 7-8 years. But then they're only rural schools. They're not rural plus urban schools. Now, it doesn't mean that urban schools are much better, but they're overall the average will increase. Quality remains a problem, but what has been missed by some people, not everybody, is that access has become universal. That almost all boys and almost all girls in the 6 to 14 age group are in schools. Literacy in that age group is near universal, and by the time they become 17, 18, almost all of them will have a smartphone. So right now there are about 500 million smartphones in India, 400 million. Other people have feature phones. In 2-3 years, even that will become all smartphones. So we are looking at a generation that is not very well educated in terms of quality, but nonetheless educated, literate, and almost certainly digital native in the next 2, 3, 4 years. So, and we are seeing that entry level white collar service talent not being a problem, higher level talent being a problem. So we need more and more education reforms. Politically speaking, getting teacher unions to be less exploitative of the state is unlikely, just politically. But technology could disrupt that, as I kind of briefly alluded to in the opening remarks with EdTech. Now, that does not mean it will happen overnight. Right now, there is a clear digital divide during the lockdown where upper middle class and middle class families' children are learning well with digital tools, and the lower middle class children are not learning because they did not have the digital tools. But even the upper middle class and middle class learning is possible because of digital tools of the last few years. And I think, I hope we don't have a pandemic, but if we have any kind of lockdown again in 2 or 3 years later, I think that divide will not be there to that extent. So that's on the education side. There are problems, but I think the trend is very much positive, despite all the political issues. Now, on the judicial side, and I would make it broader on the administrative capacity of the state. So whenever we speak of liberalization and reforms, we generally mean factor market reforms, land, labor, capital. We don't think of state capacity. And you are absolutely right. That's a big problem because, and it is not just an economic problem, it's also a social problem. I'll tell you why. Because if I don't believe in contracts, if I don't think the contract I am signing with you is worth the paper it is written on, it has at best a deterrence value only if you're a good human being. If you're not a good human being, it does not have deterrence value. Then the problem is, for a lot of people, they only try to at least interact amongst their known people. In India, that often means caste, for example. If you want to actually make business and entrepreneurship go beyond 1 or 2 or 3 castes, one of the safest ways to do it is to have a functioning judicial system. Now, that definitely seems to be a problem in India right now. I think the Modi government did try to solve that in the very first 1 or 2 years by first trying to go towards appointment of judges in the Supreme Court. The NJAC bill, despite being a constitutional amendment passed by states and the both chambers of parliament, was struck down using a dubious doctrine of jurisprudence called basic structure. So this is not the right time to speak about legal jurisprudence and all that. But I think it would be fair to say that a second term has allowed judicial and administrative reforms to be slightly more likely. There has been an increase in capacity. Information technology is being used, for example, because of the pandemic again, the Supreme Court for the first time had to do video conferencing of cases. Various high courts are using more and more databases of cases. And the state capacity, including policing capacity, bureaucrats, for the first time we have lateral entry in the Indian administrative service monopoly is being kind of broken. Now, 10, 12 people in 73 years is nothing, but at least it started. So I would say, again, the current status quo is very disheartening. I would agree with you. But the trend is also positive in that sense. I do think the main reforms that we need to do next are actually on the state capacity side. And I've written a book with my friend called, well, I can't mention the name of the book or in publishers right now, but a large part of the book covers state capacity. My friend Rajiv Mantri and I have co-authored it. It will be published by Amazon Westland in a couple of months. But I think you're right. We have to go beyond conventional economic discussions and think of state capacity as the next big thing to crack. And I think we're already on way of that, but we need more time.
That was very succinct, and we've had a very articulate session, a particularly articulate session from Harsh Madhusudan. Since there aren't any further questions, we will be taking questions on the Aramuratanayagi email ID, and we'll curate it, get it to the speakers, and get back the answers to you. So thank you very much, Harsh. That was very clear, very articulate, and rather a tour de force. So thank you very much from the bottom of our hearts for that.